Hello and welcome to our live session today with Peter. So, I understand the volatility was low yesterday.
Actually, it did. It was pretty low. We have to note here that even Fed Chairman Powell's speech was unable to excite traders. On the other hand, we have to note here that Fed Chairman Powell yesterday in a symposium which was organized by the Swedish Central Bank refrained from making any comments about the outlook of monetary policy as such. The discussion revolved mostly around whether central banks should have a more direct role and intervene deeper regarding climate change. Jerome Powell more or less refrained from such actions. That was in contrast, say, for example, with ECB board member Schnabel. She was all in favor of actually going deeper into intervening to help actually climate change. On the other hand, the second issue which would be interesting would be the release of the projections from the World Bank. More or less, the bank is expecting one of the slowest growth rates on a global level for over 20 years, almost 30 years. Now, there are two exceptions here. That would be one, the financial crisis in 2009. The second would be the financial crisis due to COVID 2 years ago. So overall, the situation looks a little bit grim, especially for developing economies. And it's characteristic that developing economies, due to the high debt burden and at the same time weak currencies, may be suffering more. Yeah, those were the two main fundamental issues.
What about US stock markets?
Well, we had discussed US stock markets on Monday, had sent some mixed signals. Yesterday, they were clearly in the greens. And that was a positive. It was indicative of a rather risk-on approach by market participants. I would expect, should the positive market sentiment remain present today as well, we may see stock markets rising even further. Mind you that the positive market sentiment was caused by the expectations of the market that the Fed's going to be easing its hawkishness. And that should be seen also in conjunction with the release of the US CPI rates tomorrow, therefore for December, and they are expected to slow down substantially. So overall, that could more or less force the bank to keep a more balanced tone. The second issue, which may have also contributed to the positive market sentiment, was practically China's reopening.
Weren't there some tensions with China's reopening?
Actually, there were. Look, China's reopening is expected to be bumpy. It's not expected to be something which will run smoothly. And the main reason is that number of cases in China is going to be rising from the reopening. Now, it's after, I think, 2 years where China had closed its borders. The main element which stood out was that South Korea and Japan imposed restrictions on travelers from China, and the Chinese responded directly by suspending visas. Now, it may sound big. In our opinion, it's still not that big. The big picture here is that China is reopening, and that could enhance its economic performance and growth. And should the Chinese grow on an economic level, that could soften the blow also on a global level.
Did the World Bank projections come out yesterday?
They did, more or less, as we have mentioned before, they were more or less on the gloomy side. That could weigh on the market sentiment somewhat. We didn't see such a reaction yet, but overall, definitely the projections are not good. and they may imply that the slow growth may have an impact also on earnings and growth for companies as well.
How have oil prices been behaving?
Oil prices more or less remained unchanged. Maybe they even edged a little bit lower yesterday. It was a big issue in the sense that we had the release of the AP crude oil inventories figure, and it showed a substantial build-up rise of US oil inventories. If I'm correct, it was over 14.8 million barrels. And the rise of US oil inventories underscored the fact that practically demand was not able to catch up with production levels in the past week. And that implied a slack in the US oil market, which could weaken oil prices. The question is whether today we are going to be seeing another rise being confirmed in US oil inventories by EIA. Should that be the case, we may see some bearish tendencies for oil prices.
And what's on the calendar for today?
Well, we had already from Turkey the current account balance and from the Czech Republic the CPI rates. I would be highlighting definitely the EIA crude oil inventories figure from the US later in the American session. Another substantial rise of oil inventories would be confirming practically yesterday's release. Other than that, I would be highlighting during tomorrow's Asian session 3 releases. The first would be from Japan, the current account balance. It's expected to widen. It's a surplus which is expected to widen, and if actually so, could provide some support for JPY, as that would imply that the Japanese economy was able to benefit from the international payment system. The second would be from Australia, it's the trade data. The emphasis now here is being placed on the trade balance of Australia. Mind you that the Aussie is a commodity currency, so it's highly positively correlated with the exports and the trading activity of Australia as such. Now, the trade balance is expected to be a surplus yet to narrow. And if that's the case, we may see the Aussie weakening. Mind you that the Aussie got some support today, as we had the release from Australia of the CPI rates, which accelerated substantially for November. And that could provide a more hawkish view from RBA, given that the bank had mentioned that it will be examining its interest rates on a case-by-case basis. At the same time, we had also an acceleration of the retail sales growth rate beyond market expectations. And that tends to intensify the situation further. Why? Because it shows an excess in demand, which more or less may force the bank to actually adopt a more hawkish tone. Now, the third release tomorrow would be from China. It's the inflation metrics. It's the CPI and the PPI rate, both for December. A possible slowdown of the PPI rate could be benefiting somewhat the Aussie, while a rise of the CPI rate, I think, could also be benefiting somewhat the Aussie, as it would allow for Australian exporters of raw material to negotiate higher prices.
Thank you, Peter. Stay tuned for our next live session with Peter.
Welcome to the technical analysis part of the presentation. My name is Peter Yusuf, market analyst, senior market analyst at IronFX. Now we'll be going through a number of charts. In front of your screen right now you have the US dollar index 4-hour chart. All charts to be presented are to be of the same time frame, the 4-hour time frame, unless otherwise stated. Now with no time to waste, US dollar maintaining a very narrow range-bound movement revolving around the 103.05 resistance line. Now, I will be drilling now to the 1-hour chart to show that in more detail. See that even in more detail, the price action remains very narrow bound, very low volatility. See how the Bollinger Bands have converged and narrowed. It's very, very characteristic. Now the question is, what's the outlook? Back to the 4-hour chart. In the first sense, definitely the expectations are for the RSI indicator, for the price action of the US dollar index to remain in a sideways motion. That would be the expectation for the next 24 hours. But if we drill out to the daily chart, you can see a nice downward movement, which was suddenly interrupted. But in the past 4 days, that was Thursday, Friday, dropped even further, and on Monday, that was Friday, Monday, Tuesday stabilized, and today seems to remain stable. It's like the market is in a wait-and-see position. If we drill even further out, say for example the weekly chart, then you can see that there is still a downward motion in play here. Back to the 4-hour chart. So the direction for the time being seems to remain in a sideways motion, but a small warning here, we may be seeing some bearish tendencies reviving again. Especially should the CPI rates of the US tomorrow, they are for December, slow down more than what's been expected. Say, for example, the headline CPI rate is expected to slow down from 7.1% to 6.5% year on year. Should the rate slow down even further, say, for example, at 6.2, 6.1, that could cause another bearish reaction for the US dollar index, as that would solidify market's expectations for an easing of the Fed's hawkishness. Should the bears take over, the next possible stop we are mentioning would be the 102.10, which, let's have a look where it rests. Practically it rests on these continuous testing, and that was around the beginning of June, while the S2 is resting on this true here at the end of May. So a possible bearish market movement for the US dollar index should the market decide to sell the US dollar. That would cause it to drop. First stop for the bears would be at the 102.10 most probably, with the next one being the 101.30. On the other hand, should the bulls take over, we may see the price action rising, clearly breaking the 103.05 and start aiming, if not even breaching, the 104.55. Mind you, we have some worries here in the sense that a possible bullish market reaction for the US dollar could prove to be asymmetrically higher, or stronger if you prefer, in comparison to a possible bearish reaction. Why? Because a slowdown is what's in the CPI rates, is what the main expectation of the market is. Should the market expectations be disproven by the release, that could cause an asymmetrical bullish reaction for the US dollar. Okay, let's have a look at Euro USD. Also in a tight range-bound movement, this time just above the 1.0730 support line, which was continuously tested. The market is in a wait-and-see position. The RSI indicator, though, seems to imply a different story. It's currently at 64 and remains pretty high. That would imply that there is a residue of a bullish sentiment in the market for the pair, which could drive the pair higher towards the R1 1.0935, a level which was tested for the last time. Let's have a look. Here it is. And that was in the beginning of April, 5th to the 6th. Test, 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 aimed for another test. So it's a pretty valid level. I would be keeping that. Even higher, we have the 1.1055, which was tested here, aimed for here, while even higher, the 1.1270. So we have to go 7 months back to find a price action which had reached 1.0935. On the flip side, should the bears take over, we may see the price action dropping, clearly breaking the 1.0730 and start aiming for the 1.0580, a level which was tested here, here, and here. That's pretty fresh, and it's in the mid-December. So we're talking only about 1 month. Could be good. For the time being, once again, sideways motion expected to continue for the next 24 hours. Let's have a look at GBP USD. It's an interesting chart in the sense that it maintains the sideways motion, yes, and that would be also due to US dollar strengthening. US dollar stability. On the other hand, though, there seem to be some bearish tendencies, in the sense that we have 1, 2 red candlesticks which stand out. It's a repeated effort by the market to drop GBP USD. The RSI indicator is still above the reading of 50. It's actually at 54, but seems to be dropping. So that would imply that the bullish sentiment is slowly but steadily fading away, causing the market to remain rather undecided on the next direction of the pair of cable. And should that drop below 50 and start aiming for the reading of 30, the RSI indicator that would be causing a bearish sentiment which could drop or put under pressure cable. For the time being, we maintain a sideways motion bias below the 1.2220. Should the bulls take over, we would require clear breaking of the 1.2220, a level which was tested here extensively this period here, and that would be on the 16th of December up until the 20th. While even higher, we note the 1.2345 tested here and here. That would be around the 13th and the 14th of December. For a clear bearish movement, I would require a drop and the breaking of the 1.19 S1. Actually, I would require a lower true than this one. Let's have a look at USD and JPY, safe haven currency pair. USD and JPY maintaining a sideways motion above the 131.80 support line. The RSI indicator is running along the reading of 50, just above it. It's actually right now at 52. An indication of a rather indecisive market. Should the bulls take over, I wouldn't be surprised to see the price action rising, breaking the 133.90 and start aiming for the 135.80. On the other hand, should the bears take over, I wouldn't be surprised to see the price action dropping, breaking the 131.80, which was tested extensively, start aiming for 129.30. Last time we saw such a price action was here on the 3rd of January. Let's have a look at USD-CHF. USD-CHF, which was able to remain afloat above the 0.92.10, and that would be proving its worth as a support line. So that would have to change from a resistance line to support line. Mind you that yesterday we had it as a support line and we changed it briefly. Next resistance line, I would be placing it at this peak here. And that would be in red. The 0.95. Let's make the corrections in the labels as well. The S2 now being placed at 0.9090. The S1 at 92.10. Sorry, 0.9210. The first resistance line now being placed at 0.9330. Second resistance line at 0.9450. And final resistance line at 0.9595. Backing everything in. For the time being, we tend to maintain a bias for a sideways motion to continue for the pair, just above the 0.9210 support line, like this. The RSI indicator is below the reading of 50, but actually pretty close. It's actually right now at 44.6, which tends to more or less support the notion of the sideways motion to continue. On the other hand, note how the how the 20 moving average has dropped, implying some bearish tendencies here. Also with another but not so steep slope, we have the 100 and the 50 moving averages also indicating a slight bearish tendency here. For the time being though, in the next 24 hours, we expect the price action to remain in a sideways motion. Should the bulls take over, so for example, if US dollar starts to strengthen, we may see the price action rising. The first possible stop would be the 0.9330 level, which was tested here, here, and to the downside, here, here, and here. While even higher, we note the 0.9450 level tested here. Some may argue also these levels, this peak here as another possible resistance line, could be valid. Yeah, I'm not denying that. To the downside, should the bears take over, we may see the price action clearly breaking the 0.9210. It's going to be far more than this test here. And start aiming for 0.9090. Let's have a look how far back S2 actually has met in price action. Last time was in January last year, around the 14th. Let's move to the Aussie. USD/TRY moving in a sideways motion as well, just above the 0.6880. Tried test on it, slight bearish tendencies. Note the slight rise during today's late Asian, early European session. So we tend to maintain the bias for sideways motion to continue. The RSI indicator is actually a little bit high. It's at 58.5.6, which may imply some bullish tendencies, but the fact that it's dropping tends to imply that the bullish sentiment is fading away. So for the time being, we maintain our bias for the sideways motion to continue just above the 0.6880. Should the bulls take over, we may see the price action rising and testing the 0.7005. Let's have a look where that actually rests. Okay, that was in August. You can see a peak here testing it, and a true also in August, and another peak, peak. Pretty valid. Okay, I'm keeping that. Even higher, we note the 0.7130. Note also how the 20 moving average, the 50, the 100 moving average all point towards an upward direction. Also note that we have a nice upward trend line here, albeit we have to question its validity given that the price action seems to be stabilizing at higher levels. So a new trend line may be forming here. Should the bears take over, we may see the price action dropping, breaking the 0.6880, which was tested here and to the upside here and here. While even lower, we know that's the next possible stop, the 0.6740. Let's have a look at USD CAD. Okay, USD CAD, which was able to resurface above the 1.3395, it seems to have stabilized. Definitely this will have to be corrected and turned into support line, given that the price action has moved decisively higher. Let's have a look for a new resistance level, ultimate resistance level. Okay, there's this peak here, but I think this double peak here is even better. We have this one as well. I'm keeping it here. In red at 1.3835 to adjust. Let's correct the labels. Let's make the correction, starting with the S3 now being placed at 1.3095, the S2 at 1.3230, the S1 at 1.3395, the R1 being placed at 1.3525, The R2 at 1.37 and the R3 at 1.3835. Let me reconfirm this. Yeah, 1.3835. Locking everything in. Let's discuss the direction. On the one hand, we have an RSI indicator which tends to be running just below the reading of 50. It's actually now at 45.5, 44.5, sorry. So that would be implying rather decisive market in favor of a sideways movement. But note how the price action has started to form lower peaks and lower trough. So we may be seeing here a downward motion which is also supported by the 100, the 50 and the 20 moving averages. Note how the Bollinger Bands have also dropped decisively lower. And I would like to see here the daily chart just to have another confirmation in the big picture. See these drops here consecutively. Seems that we have a downward motion with yesterday being a mere correction. So we may see the pair dropping, in which case definitely the first stop is going to be the 1.3395, which holded the pair's drop once, twice. Note that the drop was decisive, was holded at 1.3395, corrected higher, had another go at it, and once again the level held its ground, stopped the drop, and turned it into a nice V-shaped reversal upwards. It's a beautiful double bottom here. Should the bears take over, once again, first stop 1.3395, would expect that to be broken. And the price action is to start aiming for the 1.3230 level, which had nice beautiful true here a couple of times. That was around the 14th of November to the 17th. So seems to be pretty valid as well. Should the bulls take over, which does not seem to be the case, but it's still a possibility, which should be covered. The first stop we're setting is the R1 1.3525, a level which was a support line. You can see it here and here. But given that the price action has dropped decisively lower, has turned its role into a resistance line. Even higher, we have the 1.37 level providing resistance here and here and here. So for the time being, we tend to maintain the bias for a bearish outlook, yet the stabilization is still in play here. Let's have a look at the Kiwi. Nice sideways motion, well, tight range bound motion to be exact. On the other hand, note how the 20 moving average has moved higher, and that's reflecting practically the rise here. On the other hand, volatility has dropped. Note how the Bollinger Bands have been converging, exactly highlighting this low volatility. The RSI indicator is still above the reading of 50, but not too far off. It's actually at 55.1. So more or less that may imply slightly indecisive market about the direction of NZD-USD. Should the dollar strengthen for any given reason, we would expect NZD-USD to drop. Clearly, the first stop would be at 0.63, level providing support here and here and here. Should that be broken, the next possible stop would be at 0.6155. Beautiful reversal here, which tends to verify this level. While some may argue also these peaks here, troughs here, I assign that there is another support line a little bit higher. Could be valid. To the upside, and should the bulls take over, we may see the price action rising, breaking the 0.6440, and start aiming for 0.6570. Once again, for the time being, we expect NZD-USD to remain in a sideways motion. I can see in the comments that some of you guys want to have a look at USD-TRY. We haven't checked that out for a long time. But actually the readings which we had from Turkey were not that good. Okay. USD-TRY, daily chart. Let's enhance this. 48. Yes, let's have a look at the resistance lines. Actually, one resistance line is where the price action currently is. At 18.80. Back to the 4-hour chart. Back to the monthly. It's a peak. Okay. Let's place some support lines here. One would be here. $18.65, 68, 665. Another one at this trough here. It was a very intense movement. 18.54, 375. Let's widen this a little bit. Okay, the next one is going way down. At 1837.45. Let's have a look also to the upside. Let's place the labels. $18, 66.50. Let's open it even further. And another one at 1837.45. In red, let's put also the labels. $18.94.20. And let's open this a little bit. Final support line at 18.3745. Here we go. So we have an upward movement here, which can be drawn like this. There are a couple of breaks out, however, I would consider them false breaks. On the other hand, you can see that there is strong resistance at 18.8. The RSI indicator is running along the reading of 50, implying a rather decisive market. Right now it's at 53, so that's pretty low. More or less, I would expect some stabilization of the pair, mostly due not to TRY strengthening, rather more like due to USD's weakening. But overall, the big picture here, in my opinion, is a weakening of the TRY, which I think it would be more clearly to see if we drill out to the daily chart. You can see that it has started way back. Yeah. Back to the 4-hour chart, readjusting the levels. Eventually, I think that the 18.8 will be broken on a technical level due to the clear upward trend line. And in that case, the next possible target for TRY is the 18.9420. It's definitely, in my opinion, not so much of a short-term investment. One could be discussing it more on the long-term basis. Okay, let's have a look at your stock markets. Let's have a look at NASDAQ. NASDAQ, which for the day was in the greens for fourth day in a row. That's positive. So we see an upward movement here. Back to the 4-hour chart here. It's going to be interesting to see whether that's going to be maintained during today's American session. There was some slight stabilization during today's European, but I think during the American session we may see something more here. Let's move to the Dow Jones. Also the same upward movement. Let's adjust a little bit the chart so we get a clear picture here. We had a very similar, but not with the same intensity picture. A nice upward movement here. Note the slight correction during the early European session. The RSI indicator is implying that there is a bullish sentiment. It's actually right now at 60.63.64. I think we're moving upwards here. But that's something which remains to be seen. Also note how the 20 moving average has a clear upward tilt in combination with the RSI indicator. That would imply some bullish sentiment, yes. Let's have a look also at WTI before we leave the scene. Nothing much, sideways motion, very clear. Yet the RSI indicator is revolving around the reading of 50, also implying a rather indecisive market. It's going to be a big question whether the release of the EIA crude oil inventories figure is going to be affecting oil market or not. I think that China's reopening may, at the end of time, actually provide some support for WTI. On the other hand, the fact that on the fundamental level, the World Bank has more or less a more gloomy outlook for the global economy may weigh on WTI prices. So that should sum it up from all of us here at IronFX. Best wishes for solid trading.
Hello everyone, my name is Emily and welcome to another of our great educational trading videos. Today we're going to look at day trading. Day trading is a very popular short-term trading strategy that involves the buying and selling of financial instruments during the trading day in order to make a profit from small price movements. The most important rule of day trading is that traders need to close out all their positions at the end of the trading day. Generally, the day trader aims to take small profits that can add up during the day or trading period, while at the same time minimizing their losses. While day trading is a viable trading strategy for many experienced forex traders, beginner traders could find day trading to be challenging. Without a well-defined trading plan and the discipline to adhere to its rules, beginners might be overwhelmed by the stress of intraday trading. Day trading strategies can differ from longer-term trading strategies as they focus more on profiting from shorter-term movements in the market compared to moves that take place over a number of days or weeks. In this respect, day traders need to be continuously focused as markets can move suddenly in the short term. Overall, advantages of day trading include instant results and no overnight risk. On the other hand, the disadvantages include requiring a high initial deposit to make substantial profits, less time to think, and there is also a risk of overtrading. Thank you so much for watching us today, guys. Bye-bye.
Alright, guys. Okay, let's give it a moment for the others to join first before we begin. Okay, let's give it a minute or so. By the way, welcome to another IronFX webinar series. So today will be about the Wyckoff strategy. So today is very, very technical. So if you guys are beginner traders, I suggest you guys to just listen. Because practicing the Wyckoff strategy is very, very complicated, but it can yield very, very good results if you practice, over a long period of time. It actually took me 1 entire year to understand Wyckoff and learn how to implement it into my charting and into my trading. So it's a long process there. Okay. Let me just check it out. All right. Okay, let me turn on the chat so you guys can chat there. Can you guys see my message? Can you guys hear me? Mic test and screen test. If you guys can hear me, just let me know in the chat. All right, nice. Thank you. Promise Gritima. Hey, thank you, Lawa, Rasak. Thank you, Jesse, Banushak. All right. Ogenero. God bless. All right. Okay. So by the way, where are you guys from and how are your new year? Have you guys entered any trades so far this week? Any trades, just send it in, Okay, I've actually started my first trade yesterday. Already entered my first trade of 2023 and it actually hit my take profit. So I'm actually quite happy on that. So we also have the NFP this Friday. So do take care if you are trading. All right, you're trading CAT JPY. All right, nice. If you don't mind, you can actually screenshot your chart and you can send it to chat. We can learn from you, I can open your chart live and everyone can learn together and I can give my own opinions. All right, Ezzy Collins, thank you. Okay, let's start off. Oh, Lagos, Nigeria. Nice. Wow, that's very, very far away. I'm from Asia, Singapore. So yeah, now it's about to be my dinner time. It's already 6 p.m. Oh, Botswana, where's that? Let me check Google Maps. Botswana. All right. Oh, that is in Southern Africa, Ghana. Mambulanga. Oh, nice. Australia, Switzerland, Togo. Wow, many of you guys are from South Africa, parts of South Africa. Oh, even West Africa. Nice. All right. Okay, let us begin. Okay, just a very, very quick disclaimer. I got to read it, so do bear with me. Okay, this material is just the personal opinion of the author, which is myself. IronFX is not responsible for any loss arising from any information contained here. So redistribution of the material is strictly prohibited. So do take note that this session is audio recorded and may be published in various media, in various form. Right now, if I'm not wrong, it's streaming on LinkedIn also. So if you guys are there on LinkedIn, just do say hi. Okay, so my name is Chen Yongqing. I'm sure you guys have seen me many times before. If you guys have joined, you have seen me quite a few times. I'm trading using smart money concepts, the Wyckoff concepts, and the inner circle trader concept. All right, Lawa, Rasak, I will view your chart in a bit. I just saw it that you sent to everyone. So I'm actually the trade analyst for Everest Fortune Group. So our company, we are the finalists for the best Forex research for 2019, 2020, and 2021. We are also the finalists for the best equity research for 2020 and 2021. So right now we have a special collaboration with you guys, with IronFX, to bring you guys the good stuff, teaching you guys better ways to trade, hopefully to improve your guys' trading. Every day is a new learning day. So even if you have a good trading strategy already, put it aside for this session, for this 1 hour session, put all your trading strategy aside. Just, open yourself up to hear about this Wyckoff trading strategy. So we have a few topics to cover today. What is the Wyckoff method? Have you guys heard about the Wyckoff method? Have you guys even used the Wyckoff method? Have you guys researched about it before you guys join this webinar? Just let me know in the chat if you guys have heard about it. And we'll be trying to understand the Wyckoff method, how to use it, and how to improve on the Wyckoff method, and how to use it in trading. That's the most important thing that we want to get into by the end of this webinar. So I do not, just let you guys know, I do not expect you guys to fully understand this by the end of this 1 hour session, because it's very complicated. I'm not going to lie, it's very complicated. Most people that I've tried very hard to explain to, they don't really understand it. They don't know what are the terms. There are so many terms to Wyckoff and how you draw it on the chart. Oh, nice. You have heard about it and you are currently learning smart money concepts. Well, great. My main trading method is smart money concepts with a combination of Wyckoff. So it really helps a lot with my trading. So what is the Wyckoff method? So Wyckoff method consists of accumulation. Accumulation is when prices accumulate in a small little area before it shoots up. So this area is the accumulation. I'm sure you guys look at the charts every day, Monday to Friday. You guys confirm see it all the time. Accumulation. What is distribution? Prices consolidate and it all of a sudden go down. So this is distribution. So what is reaccumulation? Reaccumulation is when it looks like this area. Prices go up already, reaccumulates and continues moving higher. So this is reaccumulation, this is accumulation, and this is distribution. So what is redistribution? Redistribution is when price distributes, goes down, redistributes, and go down. So this area is the redistribution. So have you guys, I just want to know whether have you guys learned about the Elliott wave? Have you guys heard about Elliott wave? Because Elliott wave, you follow a fixed schematic, a fixed way of trading. So for Elliott wave, we have wave 1, wave 2, wave 3, wave 4, and wave 5. So we have a certain rules to follow, like the wave 1 to 2, it must be 61.8%. Well, for Wyckoff, we have many schematics. Accumulation, distribution, redistribution, and reaccumulation. You can actually draw it out on the chart and you can know where to enter, where to buy or where to sell. So this guy is called Richard Wyckoff. That's where the name Wyckoff came from. So Richard Wyckoff was a very good trader. He started off with $100 in 1910, 1900s. Back then, $100 and even $1,000 is a lot of money. You are like a millionaire if you had that kind of money back then. So Richard Wyckoff actually founded a stock trading school. He actually wrote a few books about trading, the Wyckoff method. And right now, this current day, the 20th century, 21st century, the Wyckoff method that all of us are using are adapted from him and has been improved on, by his students back then. So it's brought forward, things has changed here and there all the way. It's already 100 years. He has already passed away. Okay, move on. Who is he? He's one of the 5 titans of technical analysis. He's one of the best traders back then. He even created his own method of trading. He started looking at the stock market at the age of 10 years old. He already looking at 10 years old. What are we doing at 10 years old? We are playing. We are still studying, but this guy is already looking at the stock market. He was very, very interested in trading. Very, very interested to know why price moves this way or this way. So he studied and checked the charts. He's like the modern day, inner circle trader, ICT. So he's something like that back then. So he's one of the 5 titans along with Dow, Gun Chart, Elliott Wave, and Merrill. So he wrote and edited the magazine of Wall Street back then. That's not I mentioned already. Founded the Stock Market Institute School. Taught people how to trade. So he's trading capital. Back then, just imagine, I actually read his book. I already borrowed his book. I read about it, how he traded 100 years ago. Imagine you want to trade stocks, you want to trade Forex 100 years ago. How are you going to do that? Right now, it's so easy. You guys open your MetaTrader 4, open your MetaTrader 5 on your phone, on your iPhone, and on your iPad or your laptop. You just open it up, you just click buy or sell. Anytime you want, you can trade Forex or stocks. But how did he trade back then? So this is actually very interesting. I was reading his book. So right now we have something called a delay. Every time when we are trading, the brokers actually recommend us to connect to a high-speed internet connection. So there will be less lag when we are trading, less lag when we enter or exit a trade. Back then, he had to physically sit in a room with a pen and paper, with a pencil and a paper to draw out the chart. So he did not have the luxury of looking at TradingView, MetaTrader, or the charts automatically coming out. He had to draw it by hand. And every time he wanted to enter a trade, he had to pick up his phone, call his broker and tell his broker, oh, I want to buy Dow Jones at, maybe $15. How much? So by the time the broker actually inputs his order, presses his order into the system, how long did it take? It took 2 minutes. It already took 2 minutes by then. So he didn't have the luxury of that waiting time in between, yet he's still a profitable trader. All right. So Wyckoff actually has something he calls the market maker. You guys retail traders like to say, oh, my trade lost. I bought a trade, hit my stop loss because there is a market manipulation. Banks is trying to clear out my stop loss. The moment you say banks are trying to clear out my stop loss or there's a market manipulation going on, you just got to think properly. What lot size are we playing? We are entering the market with most traders are entering 0.01 lot. 0.01 lot is like 10 cents per pip. The banks do not need your 10 cents. The banks do not need your $1. So definitely there is no one is out there to manipulate the market. But Wyckoff, he believes there's a composite man. The composite man is in the market who is controlling where price goes to. It either goes up or goes down. That's what he believes. So just imagine that there is someone controlling the market called the composite man. So Pascal, you ask, how can we get the recording? Well, IronFX should upload this entire recording of this entire webinar onto YouTube soon. So maybe in a few days' time or maybe next week, you can check out the IronFX YouTube channel. So maybe I can send the IronFX YouTube channel to the chat first, so guys do not miss out on it. You let me find it. IronFX. Okay, where is it? All right, I'll just send it to the chat. So you can subscribe to the IronFX YouTube channel. In a few days' time, it might be uploaded there. All right, next, let us continue. So Wyckoff actually has a 5-step approach to the market. So his first approach is to determine the present position, the current position, and the probable and the future trend of the market. So you want to know where you are at and in the market when you actually are looking at the chart. So you want to select stocks or select currencies, select trades in harmony with the trend. That is number second approach. For the third approach, he only selects stocks with a cost that equals or exceeds the minimum objective. So fourth approach, he also determines whether the stock, or currency pair that you are looking at is ready to move in the direction that you want. Okay. Give me a moment. All right. So the fifth approach to the Wyckoff cycle is to time your commitment with the stock market index or your forex currency pairs. So next, understanding the Wyckoff method. So normally, if you look at an RSI, relative strength index, I'm sure most of you guys, beginner traders, at the start, when you open TradingView, open MetaTrader 4, there's usually an indicator, the MACD indicator, the RSI indicator. So for the RSI, it will show as oversold. For the RSI, it also shows that it's overbought. So oversold is when traders are looking to buy, and overbought, we are looking to sell. So we have the accumulation area. Prices accumulate before it shoots up. This shooting up area is called the markup area. So it marks up until the overbought area, it starts to distribute. All of a sudden, it distributes and it continues all the way down. This process going down is called the markdown area. Okay. So next, there's 3 Wyckoff. Later, I'll show you guys accumulation and distribution on the chart and how to draw them out, how to enter everything. I'll show you guys. And if you guys have any questions so far, just let me know in the chat. Just send it in. Please don't wait until the end of the webinar and all of a sudden you guys have many, many questions to ask. Just ask while I'm talking. There's nothing wrong. There's no dumb questions. If you guys don't understand, we are all here to learn. Okay, so there are 3 Wyckoff laws. You can see it from the screen. The law of supply and demand determines the price direction. So if there's enough demand, price moves on to a certain direction. To demand, the law of cause and effort. What causes price to move in that certain direction? The law of effort. So you guys do not have to memorize this. This is just an introduction to Wyckoff and what is it about. So Promise Guitima asked, do I use multi-time frame analysis with this strategy? So well, definitely. So prices work in a very, very fractal manner. So maybe on the daily chart, we are looking at an overall downtrend. But on the 4-hour chart, overall downtrend. But on the 1-hour chart, it's going on in a uptrend. So prices work in a very, very fractal manner. You guys got to, juggle around, do top-down analysis before you use any trading strategy. Every single trading strategy has to be multi-time frame. So let me show you guys the accumulation and distribution schematic. So please screenshot this down before we continue. Please screenshot this down before we continue. All right. Give me a moment. In color. Highlighter. Please screenshot this down before we continue. Okay, once you guys have screenshotted it down, I'll let you guys know. I'll get you guys ready screenshot. I'll move on to the live chart. How to draw the accumulation schematic on using Wyckoff. Give me a moment. All right. I'll just move on to euro dollar. Let me get the currency pair out. Okay. Okay, make sure you guys can see my chart clearly before I continue, before I start. All right. So right here, how do we draw an accumulation schematic? Just now I already show you guys, ask you guys to screenshot it down. Make sure you guys have screenshotted it down. So in this specific scenario, we saw that this is on the 1 minute chart, how prices all of a sudden it accumulates and it shoots up in a markup phase before it distributes and hits back down. How do we spot it? So there's a specific schematic that we have to follow. So right here, we have the selling climax. So really, you guys just look at your screenshot that I've sent in already. Selling climax. Next, we have to follow the schematic automatic reaction. Next, we have the secondary test. In our trading secondary test, I'll just write out all the abbreviations in a bit. Secondary test B. Next, we have the spring. After the spring, we have the test. That's you do not enter on the test. Well, you enter on the last points of supply, the LPS. So let me write down what does all this mean. Abbreviations. SC means selling, climax, AR. Please write it down while you guys are watching. AR means automatic reaction. ST means secondary test. STB means secondary test B. Spring just means spring, test means test. LPS means last points of supply. All right. So this is for Wyckoff accumulation schematic. So it's something like Elliott wave. If you guys have used Elliott wave, you have to follow a very fixed schematic, a very fixed way of entering a trade. So a selling climax, you can actually, price moves down, you have to draw it out all the time. Selling climax, price automatic reaction is a very huge, a rebound all the way up. So secondary test, you take it as there's some kind of zigzag. Secondary test, STB, spring. What happens? The spring breaks the secondary test B, comes back down for test. We do not know how low the test will be going. Next, price goes up, breaking the test, and then that is our entry. So normally a best way that we can enter, a possible way that we can enter, let me just draw it out. We can enter using a Fibonacci line. So let me repeat again. I do not expect you guys to fully understand Wyckoff because it's very technical and it's very complicated. So I'm trying my best right here to explain it to you guys. So with that, area got broken. Let me draw it out. Okay. Okay, the test got broken, last point of supply. You can enter using a Fibonacci line, drawing from the bottom of the test to the top and entering at the 61.8% area. Why the 61.8% area? Because it's a golden Fibonacci line. It's the golden Fibonacci ratio. So you can take a long position, enter right here. stop loss, if you want to be very, very safe, you can put it below the spring. But for me personally, I like to put it below the test because I expect that area to be respected. And where do I aim? Where is my first partial? My first partial would be the automatic reaction. I'll name out this area first partial take profit. Just remember this area is the first take profit target, so it's in green, star also in green. Okay, I'll just increase the text size a bit. First partial for take profit. Okay, and then what happens after this area gets broken, after the automatic reaction gets broken? It forms a sign of strength B. So yeah, I forgot to tell you guys there's a SOSB. SOSB is when you know that price can possibly continue going higher. So let me just type it down. Please don't screenshot first. I will just screenshot this and I send it to the chat. SOSB. Okay, just ignore SOSB. Okay, it means sign of strength. Sign of strength for price to continue moving upwards. So sign of strength. All right. So yeah, this is the entire Wyckoff accumulation schematic. Okay, secondary SC. Wait, let me get it out. Okay. I will copy link to the chart image. I'll send it to everyone. This is the Wyckoff accumulation schematic on the 1 minute chart. Before I move on to distribution, reaccumulation, and redistribution, you guys have any question, feel free to let me know. If you guys understand the schematic so far and how to spot it. So normally when an accumulation happens, normally there's some kind of area to the, let me move to the 15-minute chart. There's some kind of demand area that price has to rest into. So in this specific scenario, we have a 1 hour, a very, very nice 1 hour demand area. Okay, right here, there's a nice 1 hour demand area. You have to wait for prices to hit in a specific area. So take a look, price tap into the, okay, I'll just screenshot you one more time. I'll send it to you guys. This is the 1 hour demand zone. So if you guys use smart money concepts, this is very, very important. So Wyckoff helps a lot with that. Price steps into the demand zone. So using Wyckoff, it's a form of confirmation for your entry. So let me screenshot this down again and I'll send it to the chat. So this is the updated one. Please do not use the first one. Can I delete the first one? No, I can't. So yeah, just use this latest link that I've just sent to the chat. All right, any questions so far, or is it too complicated for you guys? You guys need me to slow down, you need me to explain? Do let me know. So this is the entire accumulation schematic. Okay, I'll be right back in a minute or so. While I'll go get a drink. My throat is getting dry. So please ask any questions. Please do not, leave any questions unanswered in your head. If you are thinking you guys don't understand, please send it in. Right, I'm back. Hey, give me a moment. My throat is just too dry, man. Okay. Okay, next. Where do we take our final take profit? So as I told you guys here already, is the first partial take profit. Your next take profit area, you can aim for a supply zone. So possibly maybe on the 5 minute chart, there might be a supply zone right here. I'll just label it down. 5 minutes supply zone. So that's the reason why you guys have to use multi-time frame analysis for your trading idea. Take a look at that. Sign of strength, and this is the 5 minutes supply zone. Okay, Jesse Banu Shak asks if we are a swing trader, can we use the same schematic wyckoff like from 4-hour demand and look for 15-minute wyckoff? Well, you can also do that because price works in a very, very fractal manner. So how it's very, very complicated because on the 1-hour time frame, let's say that we expect a spring to form on the 1 hour. Let's say this is the 1 hour chart. We have to move on to the 1 minute and then start to look for accumulation here. And when price breaks the 1 hour STB, we start to look for a distribution back on the smaller time frame to form the test. So it's very, very complicated, but for now, just aim for the 1 minute time frame. Let's try to practice it out on the 1 minute time frame. So promise Ike asks accumulation schematic. Is it safe to say it's a reversal strategy? Yes, definitely. It's safe to say so because price is moving in a strong downtrend, So an accumulation schematic is like a confirmation for you to buy in a downtrending market, expecting price to reverse back up. So yeah, I can safely say it's a form of a reversal strategy. So promise Gritima, she asked whether the entry points be refined to improve the risk to reward. So definitely. So if you this might get a bit complicated. So there's one more area that I like to use is the 70.5% Fibonacci line. So I like to use imbalance. So if you actually look at the market, if you look at the chart right here, there's a very, very tiny market imbalance right here. So this is called a fair value gap. You can actually enter. So please do not think too much about all these fair value gaps. All this is not part of the Wyckoff schematic, but this is a way that I actually use to refine my entry. So you notice that price tapped very, very nicely into it. Into that fair value gap, that market imbalance right there on the 1 minute chart. And that's how I can improve my risk to reward. So it becomes a 1 to 5.36 risk to reward. So yeah, that's how you can improve on it. Okay, Ike, what kind of pairs that you are looking at? Do let me know. For me, it's Ike. Does the zero of the Fibonacci start from the high or the low? It's from the high. So what you do is you draw from the bottom to the top. So I draw from the bottom right here, draw all the way up. That's how I get my area. So that's your answer. Kayla, EME, Kit Shotzi. So promise Ike, you want to ask other currency pairs. Go. Aussie dollar, US 30. Well, sure, let's go. Let me clear it out. Okay, price actually hit the take profit level on my previous analysis. All right. 30-minute chart. Well, for my personal experience, Wyckoff works better on the 1 minute chart. Because on the 30-minute chart, 1 hour chart, 15-minute chart is way too long. And any news events can screw up the entire schematic. So from my personal trading experience, really, Wyckoff works well on 1 minute, but it takes a long time to form. So for example, just now the euro dollar one, it actually took about it took a good 4 hours, nearly 4 hours to form the schematic. And it's all in 1 minute. You can only see Wyckoff quite clearly on the 1 minute chart. Okay, I'll move back to Go. I'll move on to 1 minute chart and find a accumulation schematic. Let me find it. All right, here we have another Wyckoff accumulation schematic. So a problem with Wyckoff accumulation schematic, every single currency pairs look slightly different, but it's more or less the same. So here we have the selling climax. I'll type it out again. Selling climax, automatic reaction. Next, we have the secondary test, the ST, secondary test. And the problem with Go that I traded Go before, secondary test B and Spring, most of the time they are sharing the same candle, sharing the same area on Go. Next, price actually breaks the secondary test. Let me get a line out. Forming a test area. So this area is the test before price continues moving up. So in this specific scenario, it looks very, very different on Go. That's the reason why I say if you enter, you take a long, your stop loss be below the spring just to be safe, just in case price clears out the test area. So next we have the last points of supply. Price goes up, breaks. Next we have the last points of supply. How do we enter? We can possibly enter at the 61.8% Fibonacci area. So again, same thing moving up. 61.8% area. You try to enter there. Long it right here. Stop loss below the STB and the spring. Your first take profit target, just remember, is here again. First take profit target. And then the SOSB forms, sign of strength. Before price continues, moving upwards towards your, so let's say we have an area, let me find, there might be some kind of demand area that we are aiming at the very, very top. Okay, there is there 30 minutes? Is there anything? No, there's a 5 minutes. Let me find a demand area. Supply area, I mean. So more or less, we have pretty much quite a nice supply zone right here. A 5 minutes supply zone. 5 minutes supply. All right, let's move back to the 1 minute chart. So that would be your final take profit target. Okay. So it works more as a scalping strategy. Yup, it does. For gold, it's quite fast. So instead of taking 4 hours on euro dollar to form, it more or less takes like an hour to form on gold. So gold is quite fast. Every currency pair, the Wyckoff schematic looks different. So do remember to test it out, back test it out all the time. What works on gold may not work on euro dollar. Okay, let me read the questions first. Okay, so Promise Guitama asked, to be able to see this, do you wait to get to the test to be able to mark up the charts? I'll keep drawing it along the way. So every time the chart moves in the area, I'll start drawing, I'll add all the schematic in, I'll keep drawing until it has to fit this specific scenario. I'll keep drawing until that shape appears. So every time the SC forms, let's say I draw the SC here, I'll just keep moving it until the schematic forms. So that's the reason why I say it might be complicated for new traders. I do not recommend beginner traders to use the Wyckoff schematic for trading. So Jesse asked whether is it right for a varied OB to have a liquidity grab for varied supply and demand. Well, so for order blocks, we will not be covering it today on the Wyckoff teachings. So it's only purely on Wyckoff. If I introduce an order block, if I introduce an order block, it might confuse many people because they do not know what an order block is and how to spot them. It might take some time for them to even see it. So Rawa Rasang asked, do I have a compound course on it? Well, I actually wrote a entire Wyckoff education post. Let me find it. That's the educational post. I'll send it to you guys in the chat. I did write it down. Okay, so we have the Wyckoff accumulation part 1. So you guys feel free to boost the idea and feel free to follow me on TradingView. Okay, so next we have the Wyckoff scheme distribution part 2. So yeah, that's how I enter a trade. Okay, so I'll screenshot this down and then I'll send it to the chat. This is for Go Wyckoff accumulation schematic. Okay, any questions so far? Any more questions so far regarding the Wyckoff accumulation schematic? Before I move on to distribution schematic, because it will get more confusing moving on from here. Okay. All right. If there are no further questions, I'll just move on to the Wyckoff distribution schematic. So distribution is when prices are moving downwards. Wait, let me check Euro a while. Okay. So I actually enter a trade. I'm still looking at it. Okay. Okay, next, let's move back to what we are talking about. The Wyckoff distribution schematic. So looking at this area, the same thing, prices already moved up. Next, we are looking for, I'll just delete this entire area out first. So we have the Wyckoff accumulation right here has already happened. Let me delete it out and we can continue. So with price tapping into the 5 minutes supply zone, we can safely start to look for a short. We can look for a sell, start to look for a sell. So how do we do that? So Wyckoff distribution schematic. I suggest you guys to go and practice accumulation first before you start to look for distribution. So instead of SC, we have BC. What is BC? It means buying climax. Same thing, we have automatic reaction secondary test, but we do not have a secondary test B. We have a UT. So UT is called the upthrust. So and next we have the UTAP. UTAP is called the upthrust after distribution. Next we have the test and then the last point of supply. And instead of SOS, we have the SOW, sign of weakness. So you see, so far I'm not looking at any PowerPoint slides to teach you guys Wyckoff because I've been using it for already 2 years. I've been using Wyckoff for 2 years. So more or less it's at the back of my mind already. So normally when I trade just now, I show you guys, oh yes, there's the PSY, preliminary supply. PSY. I normally don't draw the PSY because it's not needed. It's really not needed when you are actually trading. So I'll just ignore the PSY. When you draw it out, it just doesn't help in your charting. PSY is beside the BC. I don't think it's needed at all. So with buying climax, how do we draw it out? So BC, AR, Next, we have a ST. ST is in the middle. So you can also ignore ST. I normally do not draw ST at all. I ignore the ST because ST is somewhere in between is irrelevance. But UT, I'll draw. UT, I'll draw. I'm just saving you guys time. If you draw PSY, I'm not going to explain why it's that. Because it's basically just beside the BC. So I think it's redundant. That's the reason why I'm ignoring it. So UT, and then we have the upthrust after distribution. So how do we enter? Same thing. Price breaks the UT. Price breaks the UT, and then it retraces about 38%, 38.2%, roughly 38.2%, and then price breaks again. And at this point, you can actually enter a trade. Can either enter at 38.2%, or for me, I like to at least 61.8%, but in this scenario, it did not tap into the 61.8% area. So if you are trying to have a very, very nice entry all the time, aiming for the 61.8% area, most of the time it might not hit and you just miss out on the entire trade. So what I like to do is I either enter at the 50% area, the 50% Fibonacci line. Why 50%? Because anything above right here is the discounted area. Anything below is the premium area. So all of us we like discounts in our life. We like to buy things cheap. So you can take a short position. Stop loss above. Oh yeah, I forgot to mention this area is the test. And we are entering on the last point of supply, LPS. So after price breaks the AR, the AR right here, it forms the, what does it form? It forms the sign of weakness, the SOW. That's when you know that price can potentially continue heading downwards. So when sign of weakness forms, you can actually close part of your trade already. You do not have to hold all the way. And where do we aim for? We can aim for the next demand area. So a larger, maybe a 15 minutes demand area right here. M15 demand zone. Take a look where price hits to before it bounces up. So this is the M15 demand zone. All right. So I'll just screenshot this down and I'll just send it to the chat. Okay, at least 38.2%. So ST, SOW, everything is out there. Okay, I'll just copy link to the chart image. I'll send it to you guys. Copy link to chart image. Wait now. All right, just send it to you guys. Any questions so far, just let me know. So far, any questions regarding the Wyckoff distribution schematic, how price distributes, how you can enter your trade? So this actually takes practice. It takes some time to even spot this entire schematic on a chart. So do not hopefully wish that you can tomorrow or tonight after this webinar start to spot it on the chart. It took me actually 1 year to see it very easily. Take a look at it and I already know it's accumulation or distribution. All right, let's move on. Okay. Let me find. Okay, any questions so far? Just let me know. All right, so you're asking Jarvis Rodriguez asks whether you can access the video after the webinar. Well, definitely it might be uploaded on the IronFX YouTube channel, IronFX. Let me just send it to the chat again. me a moment. Oh my, where is it? You can actually subscribe to the IronFX YouTube channel right here. Okay. So yeah, how's the distribution? How's the accumulation so far? Rate out of 10. Are you guys will you guys use it? Will you guys use the Wyckoff trading strategy in your own trading? Do let me know whether it's a yes or no. If you guys will use it, just say yes. If you guys won't use it, too complicated for you, say no. All right, nice. Karima, Kid Shopsy. She said yes, she will use it. Well, do take some practice. Over the weekends, you can go through the charts slowly, go through on the 1 minute chart. Take your time. Take your time to look at the charts before you enter any trades. Backtest it out, most importantly. So Promise Ike said, yes, he will love to master it and try it out, definitely. Because it gives you a very, very strong confirmation. You notice when your schematic is right. It's very, very fast. Last point of supply, and it just goes on to the downside. Or Dave says, not now. You need to be mastered. Well, definitely. Wow. That's a very, very good thing that you guys that Dave has just said. He doesn't want to use it until he has mastered it. That should be the way everyone should be doing. Master it, try it out on the demo accounts first before you do it. So Jesse asks, you have a question out of the webinar. Do I mentor one-to-one? Well, if you're interested, you can actually follow me on my TradingView account. So at Jesse. You can follow me on my TradingView account. You guys can contact me there if you guys have any more questions outside of this webinar. Just let me know, can follow me, contact me there, message me. So Promise Gritima asks, you have been seeing this on the chart but wasn't sure how to approach it. Well, definitely that's the reason why. Wyckoff explains it. Wyckoff schematic actually explains it out. How to enter, how to buy or sell using the entire schematic format. So what is a break of structure? Well, Jarvis, I'll just show it to you. A break of structure looks like this. So you see price moving upward nicely. Next, what happens next? It breaks the staircase formation and starts to go down. So this is what we call this area right here is called the market structure, break of structure. So yeah, that is the break of structure. Just a very, very simple form of it. I'll just screenshot this down and I send it to chat. Break of structure. All right, so Promise Ike also said, Jarvis, I've sent the screenshot already. So Promise Ike also said it's quite simple, just a little wow. Well, it's actually very, very wow. I didn't believe it will work when I first heard about it. So Jarvis asked, can you show on the actual 5-minute chart on Go? No problem, Jesse. I'll show it to you. So okay, just take a quick look right here. Live. So price right now, I'll not talk about redistribution, reaccumulation, because it's way, way more complicated and we do not have time to talk about it in this webinar. So right now, we can potentially look for Go 2. So Go right here already tapped into this area. He has did some sort of a small little accumulation back up to the upside. Okay, I don't think I can show you right now. This looks like to me a possible reaccumulation schematic. Price can potentially go back up. So reaccumulation, I will not do it for now. So let me find another. So I already show you guys here. You cannot see on the 5-minute chart because Wyckoff is is more clear on the 1-minute chart. I do not draw Wyckoff on the 5-minute chart. It's very, very hard to find. On the 1 minute, it's clearer. me find a specific scenario. Okay, this is actually quite complicated to draw for you because it takes some practice to actually start to say, oh, there's a SC, there's an AR, there's a ST, STB, spring, last point of supply. It's very, very small, it's too small. So I'll find one that is on the larger to show you. The larger time frame. Okay, do we have it here? Do we have it here? Test. Okay, we have it here. So price actually went down to clear out the liquidity hotspot, the equal lows right there. I'll just label it out line only. So next we have the SC, AR, ST. So just now I told you guys that on Go, sometimes the ST and STB is connected. STB and Spring, they are together. So next we have the test right here and the last points of supply. So why did I draw the last points of supply there? Because if I draw it out, price broke the ST. Oh my god, wait. Let me clear this out. Oh, okay. Got it. Price broke the ST, as we've seen right here. And then price came back down, forming a test. But it did not break the secondary test B. That's why this area is respected. Next, price moves up. It breaks the test area. So the test got broken. Next, come back down. That's why I told you guys you can enter on the 61.8%. 61.8% area. You take a look. Very, very nicely. Price steps in. Take a long stop loss all the way below secondary test B, and you aim for price to the upside. You know, you can actually clear the previous high right here. Your first take profit target can potentially be there, and the rest you can leave it to run. So most of the time I like to close it out at the next high, the next swing high right here. That would be my take profit target. So yeah, I'll just screenshot this down again and then I'll just send it to the chat. Okay, so promise I say looks like head and shoulder or inverted head and shoulder pattern. Well, it looks like it. It looks like it. But Wyckoff schematic, it just gives you the explanation on what is going on in the chart. It gives you a better entry, gives you a better confirmation before you enter any trade. So yeah, by the way, we have come to the end of this webinar already. So yeah, we only managed to cover accumulation and distribution schematic. It's very, very complicated. So please take your time to understand it. Please take your time to learn it before you apply it to the charts. So yeah, any more questions, just let me know before I end this. I'll give you guys 1 more minute. A promise, Ike. No problem, no problem. A promise, Gritima. No problem also. Glad to help. All right. I'll give you guys another maybe 10 more seconds to type out your questions if there are any before we end this webinar. All right. Looks like there are no further questions. I'd like to thank you guys for joining me today. So yeah, thank you, Brian Kimani. Thank you, Charles Okokuni. Thank you, Dave. Thank you, Emmanuel Akpan. Thank you, Collins. Thank you, Jarvis Rodriguez. Thank you, Jesse Banushak. Thank you, Lawa Rasak, Muhammad Ayaj Khan, Ugenero, God bless, Paul Ekberge, Promise Guitima, Promise Ike, and Romeric Bao. So yeah, thank you guys for joining me today. I wish you guys a safe trading day ahead. We have the NFP this Friday, so please stay safe trading in the markets. Take care. So yeah, see you guys again soon. Hopefully, likely next week again. No problem, guys. Just take care. Bye-bye. Take care.
everyone. Today we'll be looking at another trading strategy known as hedging. Hedging is a risk management strategy that is used to offset losses by taking an opposite position. The two positions should both remain open without cancelling each other out, and they can be established just before the release of a key news event. Hedging against risk means using financial instruments or market strategies to offset the risk of any adverse price movements. In other words, investors hedge one investment by making another trade in an opposite direction. The reduction in risk provided by hedging usually means a reduction in potential profits. Basically, hedging is a technique that is meant to reduce a potential loss and not maximize a potential gain. If the trade you are hedging against is profitable, you also usually reduce your potential profit. However, if the trade loses money and your hedge was successful, you will have reduced your loss. Bear in mind though that every hedging strategy has a cost associated with it. So, before you decide to use hedging, you should consider if the potential benefits justify the expense. It's important to remember that the goal of hedging isn't to make money. The purpose of hedging is to protect from losses. The main advantage of hedging is that the neutral position is resistant to sharp market swings that generally take place after a significant market event occurs. Thank you for watching. Hope you found our video interesting. In our next video, we'll be looking at another trading strategy.